Hello guys and welcome to my YouTube channel once again. In today's video we're going to be analyzing crash 1000 index. All right, we're going to be analyzing from the daily time frame to see if we can find an opportunity for some trades. All right, so looking at this daily time frame, the market looks bullish. You can see it's been creating higher highs and higher lows, and then there was a pullback here, very strong pullback. The market still found its way up, created a break of structure at this point. Hold on, there was a break of structure. Sorry, it was a change of character. The market continued selling lower highs and lower lows. Finally, it went up again, created change of character again. Then it broke structure up to this high. Then there's a pullback. Now, what we are having here is looks like a pullback on this daily time frame that the market will possibly continue in its bullish move because looking at this looking at the recent high the market had created, the recent higher low the market had created, which is right here. You see, after the market moved up to this level, this is a new higher low before it bought up to this level, then pulled back. So until this low here is taken, the market still remains bullish. Until this higher low here is being taken, the market still remains bullish based on what we are seeing here on the daily time frame. So for that reason, we have to go down to the 4 hourly time frame. We have to go down to the 4 hourly time frame to spot opportunities right there. All right, so going down to the 4 hourly time frame, you can see what we have is that the market is actually on a strong zone. A strong zone it has been buying previously, a strong support zone. You can see the market just sold to that level. So as you can see, we are left with how many minutes? I think a few minutes for the current 4 hourly candlestick to close, meaning we are going to be having a bearish engulfing candlestick pattern right here. For my students to understand the engulfing candlestick strategy, there's a very nice opportunity for some buys. All right, so looking at what we have here, you can see there's an opportunity for the market to reverse to the upside. All right, since this low hasn't yet been taken out, this particular low here, this low here is yet to be taken out. So the market is still bullish until this low is taken out. Then we can say, okay, the market as there's a change of character in the market. So right now, this is what we have, and also we can quickly go down to a lower time frame to spot more opportunities or more confirmations, because if you look at here now, you can see the market has been buying for the past 1 hour. Okay, the last one leg candlestick sold nicely to this zone. Then the current one leg candlestick is buying. And going by the size of this candlestick, I believe there are some little consolidations on the lower, on a much lower time frame. Let me just check the 15 minutes time frame. Okay, on the 15 minutes time frame, I can see this. So there's a chance the market is going to buy from this zone. So if you want to take a trade on this zone, you have to just be careful. Do not be in a hurry to take this trade, because there's a very high chance the market can just drop to this zone again to create a kind of a double bottom. The market can sell back to this zone to create a kind of a double bottom, or just some kind of consolidations before it moves. This is because of the fact that where it's going to is going to be very long distance. The market can start buying from here to the next to the recent high, the recent higher high on the daily time frame. You can just buy up to that level, except that maybe the market decides to maybe on buying to certain level here, then it wants to change direction. It would want to change direction, maybe to break this low, to continue to break this zone so that it can be selling. All right, so except that we should be expecting the market to just keep on buying and buying and buying, creating higher highs and higher lows. All right, that is just it for this particular page. It's very simple. You don't need to complicate analysis. Just as long as you're able to see what you want, as you open the chart, then it's better you stick to it and wait for the market to give you what you want, the confirmations, before you take any trade. All right, so going by this, we are expecting some buys on this pair. As it is now, we're expecting some buys on this pair. All right, then let's look at another pair right here. Let's check this pair. Let's check on which pair. Let me just quickly pick one pair at random. Let's see VIX 75 one is. Let's see VIX 75 one is what we have here on this pair. All right, on this pair here, you can see some series of consolidation. This is a very strong consolidation here already, indicating a possible change in direction of the market. meaning the market can possibly be buying to the upside because of the rejections we are having. You can see the rejection candlesticks, the wicks are pointing to the downside, meaning the market will most likely be buying. All right. But then notwithstanding, let's look at the daily time frame to see what we have on the daily time frame. On the daily time frame, the market is bearish. All right. The market has been bearish, and then it was creating lower highs and lower lows. Then if you look at this, it looks like kind of like it was a high, which was we finally the market created a change of character. That's how it looks. This was a high, then the market bought above it, created a change of character. But in some cases, this doesn't look like a reasonable high because of the fact that there is no nice displacement from it. There's no reasonable displacement. The market is just consolidating, and then this particular candlestick went up and another level of consolidation here. Then it started selling. All right. So in fact, the market still looks bearish. The market still looks bearish. The most reasonable lower high here is this particular one here, and the market is yet to get there. So based on my understanding of the market, I believe this is the recent lower high. This is not a lower high. All right. So for that reason, the market looks bearish, and then selling opportunities is what you should be looking out for. And you see that the market bought and went above that particular zone we just marked and went to this particular level here, because this is what happens most of the times when the market breaks out of a consolidation or a zone. It gets back to retest the zone. This becomes a flip zone at this point, and that's why the market is selling on this daily time frame. All right. So now, if we want to focus, we have to focus on the current structure the market is creating and the zones that are around it, because the essence of going to the higher time frame is to identify zones. It's just to identify some zones. Sometimes you look at the candlestick patterns or the chart patterns the market has, then you can go down to a lower time frame to really understand, to find opportunity for yourself. All right, so let's go down to the 4 hourly time frame now. Now on the 4 hourly time frame, you can see this zone we just marked is very clear here. The zone we just marked down here. I'm trying to zoom in a bit. Okay, you can see how clear the zone is right now. Market had bought from here previously, tried to buy from here, sold from here, bought from here, tried to sell from here too. That's the same zone. Then market got to the same zone again. It bought, now it's back at this same zone, and we are having some series of consolidation. So what do you expect? You're expecting some buys. You're expecting some buys on this pair, and the buys we will be having may possibly be a kind of a retracement, because looking at the fact that we have a high here, we have a lower high here. This is another lower high, but it's not completely valid because it has not created a lower low. So there's a very high chance if we take a buy from here, then we can take a profit somewhere around this level and not allow it to go above this zone, because the market can possibly reverse it to continue with the sales. The market can possibly reverse to continue with the sales. So all right, on then here, even taking the trade at this point, you have to be careful. You can't just enter the trade at this point. You have to confirm that the market is actually ready to buy, because this is a consolidation. If you go down to the 1 hourly time frame, you have to, wow, you can see this now on the 1 hourly time frame. There was an impulsive correction. There was an impulsive correction on the 1 hourly time frame. Then let's look, is there any change of character here on this 1 hourly time frame? Is there any change of character? If we want to consider this as a high, this is a lower high, and then the market, there is a change of character. In that case, there is a change of character. The market is pulling back to continue with the buy. So there's a very high chance the market can buy right from this zone to the upside. So all we have to do is to, maybe you go down to the 15 minutes time frame to confirm your entry, the more. Just confirm your entry from there. Then you take your trades. As it is right now, there's a chance the market can buy from here. If you take a trade, you take an entry from here. This is a minimum lot size is 0.05. Then let me quickly go set it. 0.05 is the minimum lot size for this pair. If you take an entry from that spot, then you set your stop loss just right down here. It's not bad. If you put it here, it's not bad. Maybe even if it is $2 or $3 stop loss, then you go to a higher time frame to check where your TP will possibly be. One moment, or go to maybe the 4 hourly time frame to check where our TP will possibly be. Our TP can be somewhere around here. You can see that's about $16 profit for this particular setup here. Just for this particular setup, it's very simple, guys. Very simple. All right. Even if you don't want to hold it to get to $16, you can just stop. Even if at maybe $12, some is a good profit, a good risk to reward ratio. All right, you can open multiple positions, 5 positions, 10 positions, depending on your account size, and you make something reasonable. All right, so it's as simple as that, guys. It's as simple as that. So if you check out the market, we'll be buying from here based on what we see here on this chart. All right, so it's simply as simple as that. Just practice these things. When I say impulsive correction, for some of you do not understand, is a kind of a structure that indicates the market will want to change direction. Like it was selling, you can see the way it was selling down here. Then it started creating these lower highs and lower lows that are closely packed. So it indicates the market will possibly change direction, like now from the bearish direction to the bullish direction. All right, so that's what we have for you guys today. So just like this video, share it out in the comment section. Subscribe to this channel if you've not done.